Good morning, traders. I trust you're all well. Just gone 8:30 on Tuesday, the 16th of June. And as always, a quick roundup of our major markets. It's been a fantastic couple of weeks. As last week, collectively as a group, we banked over 1,200 points. A lot of the technical setups of catching those earlier positions into from phase one to phase two, those critical turning points that we look for. Majority of you managed to drop down to the smaller time frames, find some positive cyclicity into the favoured direction you're looking to trade. And I mean, we cherry picked Aussie, Yen, S&P at the start of the week, and then all the majors towards the back end of the week. So well done. This week we are still in phase two of a lot of these daily markets. We'll cover this now, obviously starting with the dollar index. So an accelerated move lower last week, breaking 97.50 into our 96 level, which was initially our intraday target. We have seen a claw back in price over the back end of last week. Fed meeting Wednesday, Thursday, Friday pulled back, and as you can see, the start of this week, we're still in this messy position. Now, what you've got to remember, being in phase two, we can expect to see messy behavior. It's never going to cycle. It's never going to be as clean as when we're seeing clear trending charts or clear trending opportunities. Yes, yesterday's candle, although it was an inside candle, I do see. I don't believe this is the initial move lower. We know with the dollar index, as you can see, when prices turn, it can take 4 or 5 days, a couple of days in here, a couple of days in here, and the same in here before we actually see that move. It's very rare we meet a level or meet a point and reverse exactly. It can consolidate range. We see that a lot with euro as well as the dollar. So, as I said, I'm not convinced that this is the move lower. So we'll have to see a clean break of 96 for me to be a confirmed seller and for me to adapt to intraday selling. But as I say, I think we'll either piss around or we'll see some sort of pullback, 97.50, even peaking 97.50, anywhere off the 200 moving average, start to see some bearish cyclicity back in, and that would be our move back lower. I do see this as a daily phase two, and I do see a daily phase one kicking in shortly, so bias to selling the dollar in a downtrend. But as I say, where we are now, these pullbacks here are the weakest parts of a trend, essentially. It's the small phase of buying in an overall momentum-based downtrend, shall we say. So not interested to be a long-term buyer, but as we know, if we catch the early start of phase two, which we did a lot of last week, in fact, then we're happy to be to find an opportunity to find an entry. I would have 97.50 as a target, which means you've got over 100 points in play there. So as we move down to the smaller time frame, it's definitely not worth taking a daily position, trading sort of this late into phase two. What I'm seeing here is, if we look slightly closer, not the cleanest of pictures, but we are seeing an inverse head and shoulders. So depending on how this next 4-hour candle's at 10 a.m., it may be a buy stop opportunity just above the current high to allow price to take into 97.50. Bearing in mind we're meeting recent lows, so this could be our 4-hour cycle in our phase two of a daily time frame. If we use the 1-hour time frame and look at the positions that we took last week, strong selling in here was simply stopped by lack of selling off 96, buyers stepping back in. When we see consolidation in and around this area, it simply means the buyers and sellers are having a fight. It is a battle, not one is in control. So it is also a sign, once you see consolidation, we have been selling quite aggressively, that we are due and may expect to see a turn in price. And that's exactly what we saw. Now, from our opportunity, once we saw that 2050 crossover, we saw the first higher high made, pullback higher low. That was our first technical setup early in the beginning of this trend change from phase one into phase two. Now, yes, yesterday with equity markets moving high, we did see a slight move lower in the dollar. Now, what I see from this itself is, yes, you could argue that this could be phase two in an hourly downtrend, but if we look and we stick to the higher time frames, that's not convincing enough that we're back moving lower. 4-hour opportunities, you can see, it's just a 4-hour deeper pullback than what we expected. So I'll be monitoring that for a 4-hour opportunity long, perhaps the second cycle into phase two. So the later we go into phase two, the less probability the setup perhaps has of winning, has of making money. We need to be cherry picking the start of the change in trend. So trade this with caution, but do bear this in mind. Obviously, the opposite now, on the flip side, we are seeing, obviously, as we know, strong euro buying in here, breaking out of our 200 pip range. This to me is a complete mess, and this to me is still in daily phase two. As you guys know, I do like price coming back into the 20 moving average before we see an acceleration higher. As we move over to the 4-hour charts, look exactly what we're seeing here is a 4-hour head and shoulder back retesting the previous neckline. So this is of interest to me right now. I will be waiting till 10 a.m. to wait for the next 4-hour bar to close. Potential sell stop in play on the, perhaps just tuck it a couple of pips beyond the low of the bar. Now, it doesn't mean to say this will kick in. As I said, we may consolidate in and around these areas before we actually see a move lower. But again, a deeper pullback on the daily will just give us an even better, higher probability trade of making money once we take the daily phase one back up in trend to meet recent highs. As I said, dollar-wise, I do see dollar moving lower on the next daily cycle. So just keep that in mind, please, guys. But as today, yeah, I mean, what you've got to remember is when we're in these turning points of the market, we don't need to dive in. We don't need to be too aggressive. If we've missed that first opportunity, which we took advantage of last week, a lot of us made money last week, then the second cycle and later as we move into phase two, as I said, we expect to see messy behavior, so we don't always have to be as aggressive as diving in. Let's wait for a higher time frame textbook opportunity, find confirmation if price is moving lower on the daily chart into phase two, and then this would be the beauty spot that we then look at buying, taking the market back higher. So as I said, don't dive in. From the dollar wise, nothing exciting just yet. We do need a little bit more confirmation that we are heading and continuing in this daily phase two. If we do continue, then we'll look at taking a second cycle across our majors. If not, we'll be patient. Once we start to break clean lows, then we'll continue and look at trading back within the trend. Okay, let's have a look at pound. Cool. Cable. We've marked 26.40 as a strong turning point. Prior to obviously seeing our double top back in April, we did see that move low. I mean, as I said, we initially thought head and shoulders moving to double top, break lower low. We're now sitting just shy of 120, which was our initial target. I still feel eventually we'll get back down to 120. You've got to remember, end of June's the cut-off for Brexit. We've got a lot going on pound-wise. Obviously, with the hit that we've taken, the potential recession that we're moving into, I do see pound moving lower eventually. I do see 120 as a potential target. From where we're looking at price currently, we did see an acceleration in buying yesterday. But again, it's while we're still below 26.40, potential daily lower high formed. Dollar showing signs of a potential phase two pushing higher would only give me the idea that we may see a further movement lower in pound first and then perhaps pull back 26.40 and then we get our second daily cycle on back lower. So we're going to have to keep our eye on pound, but with dollar pushing slightly higher, price trading below 26.40, we may see a move lower. I don't think it'll be the first move that gets to 120. We definitely need a couple of cycles to get there. But if we have the idea of pound selling, it may give us the chance to then go and sell pound yen short if yen starts to pick up a bit of strength, pound Swissy short if Swiss starts to pick up a bit of strength. So if we have the idea of how the pound's performing against the dollar, we can then correlate it and trade it against a stronger market perhaps. From a 4-hour, as you can see, we're back testing this kind of 26.40 region. Strong buying took place yesterday. I'm going to sit out with pound at present. I would like to just see where price can head essentially. If we're below 26.40 and we start selling off, I may look at some hourly cyclicity to continue trading lower. But we're just in this turning point at the moment. It's not exciting. And as I say, if you look on that daily chart, I do still feel that we are in phase two. So we may just see this before another pop higher. So I may be of interest of trading this the later stages of phase two. But again, it does decrease probability of making money. This kind of gives us the reason why we have to use our higher time frames correctly, because you could be fooled by looking at an hourly chart. This is just a messy double bottom and a pullback to then go higher. So that's looking at dollar strength. If we look at this here, we're not seeing much strength at all in this position. It's still, yes, it's come off the 20. You're tucked behind a very, very strong level. You're tucked behind the 200 moving average. Sellers are in control at the moment, so it's not a textbook buying opportunity. If you did favor to be, or you was adamant of buying the pound, then perhaps a buy stop above current highs would allow the momentum to trigger you in. Anything back above 27.50 in this here is our safe buy zone. I'll be happy to continue buying here. All the time we're below, I don't see the daily as exciting as I'd like to see it perhaps. Okay, Aussie dollar. So as we know with Aussie, we still have a very high positive correlation with the equity market, along with a couple of other majors or a couple of currencies and assets this week too. Just have a quick look at the equity market. Equity market's open bullish. It still looks bullish for me from a daily to an hourly time frame. This I would like confirmation that we are heading back long, which is why I'm not going to dive in on the Aussie just yet. If you're looking from an hourly perspective, I mean, daily, 4 hourly, both looking bullish. Hourly just looks like a stamp of the feet of the 200 moving average. Potential buyer's bar, which is due to close in 15 minutes. So we're not going to take advantage just yet. But if we have an offset that the equity market is remaining bullish, then I won't be looking to short Aussie just yet. Aussie's trapped again within this 200 pip range that we've seen for quite some time now. So if price can break above 0.70, I would open the doors to strong buying. All the time we're trapped in this position, which we've been in for quite some time, and as we know from our hourly chart, it was ranging and cycling within this for a while. Again, just hold fire here. We're not seeing, you've got a higher high and a lower high forming here, so there's complete contradictions, shall we say. The only positive thing I am seeing is if we use this as our rejection point and a higher lows formed, we may see that bullish breakout back above 0.70. Now, we would need the dollar selling off to support this position. At the minute, we're seeing dollar in phase 2. So this pair may just consolidate for a while before actually breaking higher. So I'm not going to be diving into Aussie dollar just yet. If we get an idea of how the Aussie's performing, then we may trade it against another asset. But as I say, I'll perhaps just look at your 4-hour cyclicity in here now. If we're using this as our range and looking for a breakout, just like the euro did, there's your double bottom, there's your higher high, pullback, higher low, and off we go. So we may see a bit of Aussie selling today, give us a 4-hourly higher low to allow us to buy back into 70. If we break 70, pullback, retest, that will be your second opportunity. As we know, Aussie's been very bullish, we're very overbought, which is why we're seeing quite messy behavior at the minute. So until we get some sort of confirmation, it's not top of my list at the minute. Kiwi's pretty similar as well. 64.30 lies support. Kiwi is moving slightly more bearish than Aussie is at present. Dollar pushing slightly higher. So again, from a daily perspective, this isn't exciting, and I do still see this as a Kiwi phase 2. So if we remain above 64.30 and start to see bullish price action, I may be interested in being a buyer. If we don't, then anything back down to 62.30 could be an opportunity. I mean, 200 moving average price may stall, but we're just going to use previous levels, previous zones to mark our parameters and then adapt to price action once we see some sort of movement progress. At the minute, I see this as a daily phase 2, which is why we're seeing quite messy behavior. From an hourly perspective, again, you can see this. We've had a morning of selling off. So momentum positions, we can adjust the Kiwi selling. So as an example, if euro continues perhaps buying and euro breaks certain levels, then we'd look at euro Kiwi long, which would be euro strength Kiwi weakness. May not be progressing. Okay, here we go. Look, so as you can see from the last 5 hours, we've moved 130 points. So there's an example of one currency pair being stronger than another and seeing an acceleration higher. Textbook setups come in once we see a slight retracement and bounce again, but we'll have to judge momentum to see if that really sticks. Okay, Kiwi. Dollar CAD, if we just take a quick look at dollar CAD. Dollar CAD, again, we're still in this daily phase 2 position. We're hovering around the 20, we're hovering around the 200 moving average. We're seeing short-term dollar buying. CAD isn't up to too much itself. I mean, if we look at other CAD markets, we're not really seeing anything exciting. So where we are now, as I say, daily phase 2. I do see price coming up slightly higher. In an ideal world, I would need a nice big seller's bar, engulfing bar to lead the way, but this could be a textbook daily short once we see the sellers regain some control. From an hourly, let's move back to a 4-hourly. 4 hours, you can see you're seeing that slight push higher. The 4 hour can get to the 200 moving average, and then that sits nicely with the the lower high being formed and the daily coming back lower may be of interest. But as I said, we're in this turning point now. We're not at the early stages of phase 2, so we can't look for that aggressive reversal. We're mid to late stages of phase 2. There's nothing exciting going on. We need confirmation from the dollar. We need confirmation from most major markets. So let's just hold fire here. Dollar Swissy, I mean, for me, with short-term dollar buying, I do want to see a pullback into 96 before a bounce lower. I'm glad we broke out of this 200 pip range. Price have been boring us with for quite some time. So lower high formation and textbook shorts are valid and will be in play. We're just going to have to adapt to sentiment now. Potential, as you can see, head and shoulders back into 96. 4-hour opportunity, this being a higher low. But as I said, we're scratching for positions here where the market is being extremely indecisive. Dollar yen, we're going to use 108 as our baby. As always, buying above, selling below. So now we're in short-term dollar buying daily phase 2. Look for a 108 rejection to move the market back lower. So short-term buying into 108, lower high to be formed, bearish engulfing, bearish bars lead the way, and we take the market back lower. Just a touch on the oil market, we did see a slight retracement. I did see this on Friday. I didn't fancy it because we're so close to this 40 mark, 200 moving average. I do see price moving lower. So I'm going to be looking to be a seller from this area and then a buyer from $20. So that will be my reasoning with oil. Gold is far too messy for it. It's not high on my list at all. I'll be looking to look at some key breaks. Just moving down to a 4-hour time frame, we can start to see some bullish cyclicity above this. I mean, even above sort of 1750 would be perfect. Anything above 1750, be happy to be a buyer of. Just got to start to take out these highs, as you can see in here. Up and above will be confirmed buying, but again, not looking to do anything just yet. With the equity market still pushing higher, make sure you understand the correlation that's currently going on with our Aussie market. There's actually stronger correlation across some other major markets as well. Just keep an eye on how the equity market's performing. If we do see a bullish push, adapt. If we see a bearish push, adapt. So, as I say, not the nicest of breakdowns and analysis this morning. Quite messy charts. Lots of phase 2s, expecting lots of messy behavior. Lots of markets at some key levels. So we're just going to have to adapt, guys. I will do an update video once the market kicks off, but all good and have a great day.